we've recovered a bit of lost ground and banks are still trading higher, but the world markets were a very volatile place throughout the trading day today. US has hiked tariffs on China. There's some pushback from Iran with regards to the relationships that they have with US imposing those tariffs. Add to that all that's happening on the trade front. So important to get a view from Alistair Newton of Alavan Business Advisory. He joins us right now on the show. Alistair, good having you. Thanks much for joining in and thanks for being patient with us. We were talking about the results of one of the largest banks in India, so couldn't come to you earlier. Having said that, what's your sense of how the world markets are shaping up in light of US raising tariffs on China?
Well, clearly we've seen a lot of action in equity markets worldwide already this week. I think so far today, the reaction has been relatively muted. But I think also investors are waiting to see what China does by way of inevitable retaliation.
They have said they will. So with an assumption that China is going to go out and take a retaliatory action, do you think the markets are pricing that in already? Because there's some bit of nervousness in the last few days in equity markets worldwide. I mean, the Asian markets have fallen a lot more than the US markets, but the US markets too have come off in anticipating these moves.
I think basically nothing gets priced in until it has happened. So having said that, of course, things could go the other way. You'll no doubt recall that yesterday evening, Mr. Trump announced that he had had a beautiful letter, close quotes, from Xi Jinping. Xi Jinping is actually very good at handling Donald Trump, knows how to play to his ego. And it actually wouldn't surprise me at all if we still got a deal even in the next 2 or 3 days.
Okay. Interesting. You are saying that we might get a deal despite that US has hiked tariffs and China is saying that they will put in retaliatory tariffs.
Yeah, I think it's quite plausible. I think Donald Trump is playing his usual negotiating game. He wants to take personal credit for the outcome of these negotiations. He wants a deal. China wants a deal. It is, in my view, very likely that we will ultimately get a deal. Now, whether it's this weekend or a week in the future or whatever remains to be seen. But I think so far, a lot of investors are still assuming that there is going to be a deal either now or in the not too distant future.
Okay. In which case, Alistair, would you believe that market participants by and large could also be thinking along those possibilities? Because as I said, while we've corrected in the run-up to this event, the news today has not brought about any jitters in equity markets worldwide. Could it be the anticipation that, yes, the news is out of the way, but maybe some resolution could be reached soon?
I think investors are still betting on a resolution. Okay. And in my book, they are right to do so. The question is when, not if.
Okay.
Alistair, keep in mind, too, that the tariffs which the US, sorry, if I can finish, the tariffs the US announced last night, they do not come into effect on any goods which are already on the high seas. So there is a 3-week delay, in fact, before we see tariffs on goods entering the US.
Okay, point well taken. Alistair, you follow geopolitics very closely. I'm guessing you follow politics too. You would be looking very keenly at what the developments in India are shaping up to be. What have you made sitting out there about the elections thus far? Because I see a lot of local brokerages now starting to turn a bit edgy with regards to the election outcome from India. Are you hearing anything? Are you observing anything which makes you take notice?
Well, nothing which makes me change my mind about this election, which is that it's going to be very close indeed. But I still think personally that we are going to see Prime Minister Modi re-elected, returned as Prime Minister, with a significantly reduced majority for sure, and probably having to go into coalition with other parties. I think the security situation has played very much to his advantage. I think the government's handling of last week's storm was a positive for him. The economy is a mixed blessing. Some of it, aspects of it are good, some are less good, as you know. And certainly in rural areas, the BJP is going to struggle, including in its Hindu heartlands in the north. But I still think that it would be wrong to underestimate Narendra Modi. I don't think we're going to see a repeat of 2004.
Okay. Alistair, would that be viewed poorly by the markets? How do you think, you've looked at India for long, how do you think the Indian markets would react or foreign investors would react on either of the outcomes?
Well, I think overall foreign investors are betting on the return of Narendra Modi at the moment. If we do get a surprise, if we do get a rerun of 2004, then I do think you're going to see a sell-off in Indian equity markets, at least by overseas investors. Some of my friends in India are actually saying to me that they don't think there will be a big domestic sell-off. I really don't have an expert view on that. You have plenty of people you can talk to about that, and you'll have your own view. But I certainly think overseas investors would see a Congress-led government as being a negative for the Indian stock market.
Okay. What's your view on the EMs by and large, Alistair? There's a lot of talk about how the Asia-based emerging markets are by and large neither looking expensive nor looking cheap, but in light of all the retaliatory tariffs and the action that we have, it's best to stay on the sidelines. What would your thoughts be?
Well, for sure. I think there's two things to take into account at the moment. The first is the one you've mentioned, which is the risk of an escalating trade war, which clearly would have a very big impact on supply chain countries around Asia as a whole. The second is the oil price. For net energy importers such as India, further tensions in the Gulf, possibly a flare-up of some sort between the US and Iran, would certainly push the oil price significantly higher than it is at the moment. I have to say that typically of the investment community, they're really only focusing on one big issue at a time, and that big issue today is US-China. They're not paying sufficient attention to events in the Gulf, as is witnessed by the price of Brent crude this morning. And we could see a big surprise there. If we see Brent go back to 80 or even higher, then that clearly is going to be bad news for the global economy generally, bad news for stock markets, and particularly bad news for economies such as India, which are highly dependent on oil imports. And let's also keep in mind that even absent that, if the US were to impose sanctions on India for continuing to buy Iranian oil, which I believe India will continue to do, that too is going to be bad news for sentiment over the Indian market.
Okay, and actually I was going to end my conversation with you on the topic of oil as well. It's a moving piece, and while Saudi Arabia has offered to fill up the losses in the near term, I think up till June if I'm not wrong, but what do you think is the near term or the medium term trajectory for what crude prices do? Because almost everybody was anticipating or of the belief that we will not cross the 75 to the 80 mark, because then the shale production and other added production, etc., will all come into effect, because this was a supply side driven rally and not a demand led rally. Would you be of the same opinion?
Well, I've got two caveats on that. It's a reasonable scenario, but the two caveats are as follows. First of all, if we get a trade war, the oil price is going down. Let's be clear about that. If we don't get a deal between the US and China, if we get escalating tariffication of goods, then that's going to be a big hit for the global economy. Oil price will come down. Secondly, on the question of shale and $75 a barrel, $80 a barrel, fine up to a point, but what the world is short of today is heavy crude. Venezuela being one of the major sources of that, and the problems there are well documented. We could still see the oil price going up further beyond 75, simply because shale cannot fill the gap in the market demand for heavy crude, being extremely light crude. So we need to look at the grades of oil prices as well as sheer volume globally.